So just to confirm that today, this session will be recorded. The recording will be available for download post the event. So please take my details and get in touch if you'd like a copy of it. And the actual briefing slides can be made available as well. So what we're going to do in the next 20 minutes or so is going to go through some introduction, both about me and the technology, and then going to be talking a little bit about actually what blockchain is and what a distributed ledger technology is, what the differences are between them, how they all work out, and most importantly, what the actual use cases are of using this technology. Because it's all well and good knowing how these things work. What you're really interested in is who's actually doing things with it right now, and hopefully we'll cover that in some brief detail later on. To begin with the introductions, introduction to this session really. The first thing is that the expectation is that you've got zero prior knowledge on this topic, and the session is designed to be business rather than technical focused. So if you're hoping to get like a very technical briefing or like about programming or anything, that this isn't a session for you. And it is designed for those who want to get a really high level understanding of blockchain core concepts and use cases. From that as well, equally as important is the out of scope things. So we're not going to be talking about things like initial coin offerings or mining or wallet creation. We're not going to be going to get into the actual coding, as I say, and we're not going to be going into any depth around things like cryptography or crypto or Bitcoin trading. So the objective really for this session are threefold. It's firstly that by the end of the session you'll be able to explain what distributed ledger is. You'll have an appreciation of how a blockchain can be used, and that's probably the first learning thing there are many blockchains, there isn't just the one blockchain, and you'll be aware of some of the high level use cases as well, what I describe as the use cases. A little bit about me. My background spans about 30 years across different industries: retail, pharmaceuticals, supply chain, commodities trading, insurance, a number of other sectors as well. I've been working in the blockchain consultancy space for around 4 years. I find it a fascinating area, and as a result, I set up a consultancy practice called Untitled, which is around distributed ledger analytics. I work with a number of startups, such as Blocksure, who I mentioned there. I'm an advisor to Blocksure, who are an insurance blockchain startup. I'm working with Lancor, who are a cancer screening research company who are using blockchain. I'm helping them. And I also provide a lot of education, advisory and training sessions, both to companies and individuals through the likes of the Guardian newspaper. I travel around the world doing presentations and seminars through the likes of Freeform of my client Digital. And also I work directly with some organisations. So I was working last year with the likes of Ally Bank in Pakistan, and as an advisor to the West Bengal regional government on their blockchain strategy. My main niche is around insurance, so you may find that some of this topics I talk about might be particularly insurance related in some way. Before we go any further, I'd like to go into what I describe as some mythbusters as well. It's important that I make sure that we all have a common understanding of this technology and what it is and what it isn't. And so the first thing I'll raise, and this often comes up, is that Bitcoin, which we keep hearing about when we're talking about blockchain. Bitcoin is an example of a use of a blockchain. It's not the only one. There are many others as well, and we will be going into some of those. The next one is that blockchains are secure. You'll hear about exchanges and wallets being attacked, but that is the end point. It's not the actual blockchain itself, which is having problems. So blockchains themselves are actually secure. Another thing, you will tend to hear a lot about Bitcoin being mentioned in cryptocurrencies, and I do mention them a little bit further on. Cryptocurrencies aren't the only use case for blockchain, though. We will be covering many other areas. And linked again to Bitcoin and crypto, we tend to get some people, particularly the UK government was doing this quite a lot a while ago with the regulator, where they're all talking about blockchain, Bitcoin's about this same thing, and so it's all about illicit trading, criminal money laundering activity. It's actually not, a very, very small amount. Another thing you may hear is this thing about mining. Now, mining as part of the blockchain protocols uses a lot of computer power and energy, and let's talk about how it's equivalent to using consuming the resources. I think it's the equivalent of Switzerland at the moment. And that is changing. The technology is improving, it is becoming more efficient, and so we're not going to see global warming as a result of blockchain. I'm a blockchain. I describe myself as an evangelist and an enthusiast and a luminary. I cast light onto these darker type areas of our technology. And I'll be the first to admit that blockchain is not the answer to everything. And in fact, probably in about 95% of the time, the projects that I get invited in to assess or to review or to implementing, actually blockchain is not the right answer. So that's just something aware of. And it is an immature technology as well. It is developing rapidly, but I think of it as equivalent to aviation, really. And if you think about aviation around about 1903 with the Wright brothers in America, the very first early hops of a little aeroplane, we're a long way away from having 400 passengers sitting on an aeroplane traveling at 500 miles per hour. Finally on that, it really could cure world hunger. I'm not going to cover how that's going to do that, but there are projects that have been worked on, particularly in the charity sector, where blockchain is going to make a real difference. So with that, that's hopefully undone some of the myths, some of the untruths around this. Let's actually take a look at blockchain and sort of the technology overview now. So we're going to cover three things. We're going to talk about protocols, about distributed ledgers, and about blockchain itself. We begin with protocols. I often ask the question of, does anybody know what a protocol is? And it's a little bit difficult with a one-way webinar asking this right now, but think to yourself, protocols are basically a set of rules on how we operate, and they're either business rules on how we operate with customers and clients and suppliers, or they may be social rules, how we interact with each other, how we shake hands, how we introduce each other, and so on. Or they may be technology protocols, and Bluetooth is a great example of that, where Bluetooth is built into people's mobile phones, and that allows your mobile phone to now talk to other devices seamlessly without you even realizing it. That's done through a simple Bluetooth protocol. So protocols are amazing, and it's because blockchain is actually a protocol in some way that it got me really excited about this technology a few years ago when I first started learning about it. Because if we look back at other protocols, some of you may have heard of TCP/IP. Most of you will undoubtedly have heard of HTTP because you've seen it in your web browser. Well, blockchain is just the latest protocol that's coming through, really. It's just the latest version on that. And if we go back to those three protocols, TCP/IP, for those who aren't aware of it, TCP/IP is actually the technical name for what we now know and use as the internet. And that was introduced in the 1980s. A team of people developed it through the USA primarily and then expanded. And if we look at what the internet allows, what the World Wide Web allows, and what blockchain will allow, this is what got me really excited originally. Because the internet allows us to share data. It allows us to exchange information, and the web allows us to actually display the information. The amazing thing about the blockchain protocol is that it allows us to transfer value. Now, if we think of another protocol, for example, so there's one called SMTP, which is email, that allows us to take copies of data, so we can send email attachments and everything, but we can't actually send the original and ensure that the destination now has it and the originator doesn't. So we can't transfer data, we can only copy data. And this was the real step change with the introduction of the blockchain protocol originally through Bitcoin, in fact, was that it actually allows the transfer of value. So you think about with money, for example, the only way we can truly transfer value at the moment is through cash. I hand over a banknote to somebody else, and they now have that banknote. They now have that value. I no longer have that value. We don't both have copies of that banknote. And that was the principle behind what brought about Bitcoin in 2008, when a white paper was produced by a anonymous person or group of people called Satoshi Nakamoto, and we don't know who she is, or who they are, or who he is. They wrote this paper talking about they developed this new electronic cash system that's fully peer-to-peer, i.e. person to person or organization to organization, without a trusted third party in between. So you think about that at the moment, how we send money, for example. We use a bank or a credit card or PayPal or Western Union. Well, we use an intermediary in some way. Whereas with the Bitcoin protocol, the idea was it was an electronic payment system that transferred value without an intermediary. And that was what led to the birth of Bitcoin, and from that a series of blockchain protocols that came about from that. So let's talk about distributed ledgers. And you'll hear the term distributed ledger and blockchain used synonymously, really, because they are very, very related to each other, but they are, however, different. So I'm going to go briefly into what distributed ledger is first, and then how it's applied on a blockchain for you then better understand it, before we then go on and cover some of the use cases of how it's actually used. So if we think about what a distributed ledger is, if we have a financial transaction, for example, between two parties, then we'll need a record of that transaction in some way. And that record is what's known as a ledger. And that's just simply a journal transaction. And it'll have a date stamp on it. It'll say who the value is from, who it's to, what the units of currency was, and what the amount was. So in this case, Barclays sent HSBC £500. Nice and simple. That's all a ledger is. It's just that record of transaction. But usually there are lots of transactions, so there are lots and lots of ledger records, and everybody keeps a copy of their own ledger. So, Barclays got their ledger, HSBC have got their ledger, Santander have got their ledger. And this is where it becomes very inefficient very quickly, because each of those parties now need to reconcile their data, make sure every record is consistent, all the data is tied in, that there's no data gone missing or anything like that. And we have to audit the system to make sure it works consistently as well. What this means is that we have quite an expensive overhead in terms of the effort and time taken to do all this reconciliation. And you end up with a lot of accountants who will download their data into an Excel spreadsheet, do the reconciliation, and then they'll have to reconcile the spreadsheets and so on. So it becomes remarkably inefficient, and you get data quality issues where the reconciliation identifies an anomaly, but rather than sorting it out, they just work around it in some way. So it tends to be that reconciliation is very slow, and audits as well tend to be after the events. You don't use audits to identify that you are having a problem. You do the audits to identify a problem after. What we can do is, instead of everybody having separate ledgers, we can have a single ledger. This is what's known as a mutual ledger, and therefore we have much less reconciliations to do because there's only one set of records of transactions. What we can then do is we can take that ledger and we can issue a copy of it out to everybody. So now we have a thing called a mutual distributed ledger. So we know what a ledger is, we know what a mutual ledger is. When we distribute it out, that's what we have, a mutual distributed ledger. What we can then do is we can put some security around it, known cryptography, because we don't want everybody to be able to see everybody else's data. So in this case, we can do it so that Barclays can only see its transactions and so on. So it makes it a very secure, very resilient environment from there. And we can also put a wrapper around it. We can restrict it as to who can access it, and that's what's called a private permissioned ledger. Or we can have complete open access, and this is where Bitcoin works, which is a public unpermissioned ledger. And it's really important when you're designing these systems to work out which way around you want your system to work on. We can also have not just data in a blockchain, but we can have computer programs. These are known as smart contracts, which are neither smart nor contracts. And these can take in data sources, and when events happen, they can trigger to make an event happen automatically, and we'll cover some of those shortly. So let's talk about a blockchain now. And for that, we just need to introduce a little bit more complexity, a thing called a cryptographic hash. This is simply a calculation that if we feed some data into it, the calculation or the hash comes out with a unique output. It's kind of electronic signature. And how we use that is, if imagine we go back to that physical ledger for a moment, imagine it an old-fashioned paper ledger. We fill in our transactions, then at the bottom of that page, we create a hash of all of those transactions and all that data, so it's a unique signature. We then take that hash, copy it to the top of the next page, and we fill in the record ledger again, and at the bottom of the page, we then do a hash again, and so on and so forth. So now each of these blocks of data are now chained together through this hash. So the blocks are chained together, so that's what a blockchain is. And that's why I put the name of it. What it also means as well, it's amazingly difficult to change an earlier entry in any of these records, because all those hashes then have to be recalculated. So that makes it very resilient. What we can also do, we can put other things onto a ledger, such as assets, car ownership, property ownership, document details. But in essence, the summary is that all a blockchain is that it's an append-only database that everyone has an identical copy of. All the entries timestamped, and the data is cryptographically secured, which actually means it's really boring. And that's the great thing about protocols. Protocols tend to be boring, and we just get on with using them without realizing it. And there are different protocols that are designed for different purposes. So we have Bitcoin, which you'll have heard of, Ethereum, which is done for programmability. We have the likes of Neo and EOS, for example, that they use for programmability. Then we have Corda, which is doing a lot of financial services thing. I mentioned these simply so that you're aware that there are many of these protocols. The key thing, though, is what are the features of a blockchain. The main one really is that it's immutable. In fact, you've got this complete time-stamped audit trail, which is very, very useful. It's distributed, which means it's resistant to cyber attack. It's crypto secured, so it can't easily be hacked. Programmability, I mentioned smart contracts already can be created, and it's pseudo-anonymous. It's not completely anonymous. There are ways around that. The key thing for businesses is the benefits are that reconciliation is significantly reduced. We remove the need for trusted third parties, so that leads to cost reduction, and it's decentralized as well, which means it's censorship resistant, which can be difficult for organizations athletes used, and also it allows us to have tamper-proof execution of rules. Quickly then, on the use cases, I see there are 5 major areas that are using blockchains, either as an immutable ledger, as cryptocurrency, to provide digital identity, there's programmability, and then there's tokenization of assets, which is a growing area at the moment. First one, as an immutable ledger, major use case here is Everledger. They use a blockchain to actually track diamonds coming out of the ground, and they can store a hash of that diamond, and that goes onto a ledger that proves ownership and so on. Similar thing works with Maersk, who have introduced a project with IBM called TradeLens, which is used for trade finance on supply chain shipping. And there's a lot of growth in food tracking and tracing at the moment and provenance. So Furfood is an example of that. Walmart is another one. Next mega case is as a cryptocurrency platform. There's currently around about 2,500 cryptocurrencies being traded, representing a market cap of about $300 billion. That number keeps going up and down. As the volatility of crypto, which is highly volatile, the numbers keep changing. Last year, it headed up toward around about $1 trillion in cap. And then you'll probably start hearing things like Facebook with the Libra project that they're involved in, which is looking at introducing a new form of cryptocurrency trade across their platforms. And governments are getting in on this as well. So recently, the Chinese government have announced that they are very close to introducing a digital cryptocurrency. And Russia is doing something similar. Next major use case is in digital identity. Won't go into the details here, but it's well worthwhile taking a look at the likes of Estonia, who have put all their citizens and their records on a blockchain. Georgia, which is geographically near to Estonia as well, that they've done a similar project where that they've put public records onto a blockchain of things like citizens and title deed of properties and so on. We have trusted programmability. This ties in really nicely with Sri Lanka, were Risk, who are a company who I was advising last year as part of the FCA Sandbox program. They have launched with Oxfam and Aon the ability to have agricultural insurance in Sri Lanka. So if there is like a heavy storm or really, really bad weather, then the farmers can now claim on their insurance much more easily using smart contracts. And then there's tokenization of assets. This is a real growth area. I'm an advisor to Simple Token who are doing this, where they're white labeling things. Think of it as a new way of doing loyalty schemes, and also things like fractional ownership of property, and also of traditional assets such as gold and precious metals. In terms of blockchain adoption at the moment, according to Gartner, who are an analyst firm who do a lot of work in the space, they say the blockchain is about to hit the trough of disillusionment. And it goes beyond that, in fact, because if we look at across different industries, there are different rates of adoption of this technology. And already that Gartner suggests that cryptocurrency is about as low as it's going to go, and it's going to start improving soon. But we take a look at things like blockchain consortia, that there's a real growth in that. And it's interesting as well, I keep track of blockchain consortia and seeing the major way that projects are growing at the moment, where we've got a whole range of consortia across industries and across supply chains moving into the space. Things, lessons to close on really, is that the really important thing around blockchain adoption is the need for education. And also to recognize that it is an emerging technology, so please do start small, explore high proof concepts. The processes do need to be multi-party. I do steal the words of one of my colleagues from Royal Bank of Scotland, Rich Crook, who once said, you can only have so much fun with blockchain on your own, so you do need multi-party projects. And the organizations must be willing to change their processes to take advantage of technology as well. Then finally, I'd leave the final one of don't make the same mistakes that others have made when you're exploring blockchain. So with that, I'd like to go on to the Q&A session in the last few minutes. Thank you for your time. I'm going to see if we can unmute this now. Just before I do that, I'll also stop the recording as well, just in case it gets too noisy. So thank you for your time, and I hope you found that of interest. My contact details if you need any further information.